Welcome back to the Michigan Business Beat, brought to you on the Michigan Business Network. Chris Holman here, and we're coming to you from our studios at the Capital Region International Airport. And for the final segment here of what's happening with vacancies in the mid-Michigan market, we're going to spend a little time with Carson Patten. He's the Vice President of Retail Advisor at Martin Commercial Properties, and Samantha Lee, who is the Senior Associate Retail Advisor with the same company, Martin Commercial Properties. Thanks for jumping on with us. We appreciate it, folks.
Thank you for having us.
That's all right. Carson, I love the fact that you raised your hand so we could tell that you weren't Samantha. All right. All right, let's talk about retail vacancy rates. Up, down, where are they headed, and what was your most recent kind of survey of that?
So our vacancy rates continue to decline, which is good. We're at 17% now, flat, down from 17.4% in overall vacancy. Now, in comparison to the national average, Lansing is above that national average. But I think when really looking at the overall vacancy in the busy retail pockets, we're seeing retail vacancy far less than that. So the Frandors, the Eastwood town centers, the Delta Crossings, the vacancy rate is really closer to 10% or less, which is a lot closer to that national average.
You know, it's kind of interesting when I look at the commercial district downtown, I keep thinking about state workers who are not there, making that a little more vibrant. I would assume that's in the mix, eh?
Yeah, of course. Having your largest benefactors being in the office, it trickles down to having the residential, having the workers there, and that affects the retail that's in these specific locations as well.
All right, so what are the economic pressures that are kind of leading to this vacancy rate?
I think there's just a lot of uncertainty right now in the retail market, and that's not just in our region, it's nationally as well. I think that going into 2026, we're seeing some of that pick up as retailers are getting back into real estate committee. But there's a lot of question marks on how certain things like tariffs will affect users as well as just consumer behavior.
Absolutely. I think what we saw last year was there was a lot of activity overall, but really the uncertainty slowed down the decision-making process. And going into 26, we're still seeing a steady amount of interest. It's just still taking longer than I think everybody wants to make those decisions. But we're hoping into this year we can get some of these deals across the finish line.
You know, our most recent Future Business Index that Scenair sponsors came in, and that was the first time we'd ever seen uncertainty in the top 10 things that were causing business problems. And so I think you're right on with that. Let's talk about the retail types of businesses that are thriving and kind of what's driving that resilience.
Sure. So we're still seeing entertainment use. Right after COVID, experiential retail was very hot. We're still seeing the development of that, although it has slowed some, and we would anticipate going into 2026 as people are just more familiar with getting back together, that experiential retail, some of these entertainment uses have slowed and will continue to have less openings.
Yeah, we're also seeing quick service retail, so the fast food restaurants, those continue to thrive. New development for that is pretty active overall, not only in this market, but across the country. We're also seeing new adaptive uses like health-oriented med spas, vet clinics we're seeing an increase in groups trying to open up and expand.
And we're seeing health focused uses as well. So the Planet Fitnesses, as well as other health classes and fitness, are a really hot retail user right now.
You know, I think of like high caliber karting and some of those experiential things too. They're taking up some pretty major space and where they should in the malls, which is really kind of saving some of them. So, you know, we had seen some significant growth in build-to-suit developments. How are developers and retailers working together to create these spaces?
Sure. Nationally, because the retail vacancy has been so low, we're seeing a lot of these build-to-suit development opportunities because there's not as much inline and infill vacancy and availability in these markets.
Usually with the new developments, which are typically pad sites on the retail end. They're located in really dense, high quality retail areas. So you look at corridors like South Cedar near the Mire, up near Eastwood, or on the west side, we're seeing a lot of new pad growth, which has been promising. But it's
Yeah.
really like a domino. You see one successful tenant, and the other tenants really want to build off of that.
So let's talk about real basic real estate, and that is eateries. They open and they close with the market evolving. How do you see that in the future? Is that balance still going to maintain, or?
Yeah, with food uses, because retail is so consumer driven, we're constantly seeing food users adapt to what the consumer is looking for, and that's not unusual in the retail market.
No, you're absolutely right. Well, Carson Patten, Vice President Retail Advisor with Martin Commercial Properties, and Samantha Lee, Senior Associate Retail Advisor with the same company, Martin Commercial Properties. Thanks so much for bringing us up to date. We appreciate your time.
Thanks
Thank
for
you.
having us. Stay warm.
You too. That's going to get harder, as a matter of fact. You're watching the Michigan Business Beat on the Michigan Business Network.